Good afternoon and welcome to the Wall Street Crossover Show, sponsored by Admiral Markets and featuring their senior market commentator, Darren Sinden. Good afternoon, Darren.
Good afternoon, Zach.
Right, end of the week. Are we in weekend mode, or are we still fighting to try and extract some cash from the markets?
I think most people have done what they need to do. To be honest, there's one key data point in the US to look out for this afternoon, which we'll talk about in a moment. But once that's out of the way, I think that's probably it for this week. There's plenty to look forward to, though. As again, we'll see in a moment for the early part of next week, certainly, particularly not so much in the US, but there's data from elsewhere that will occupy people's minds next week.
Interesting, you've got those events next week, but the market seems to have squeezed higher rather than lower.
Yes, it's surprising. It's taken the view, I think, that the rates in the States will stay low for longer, which obviously has been our stance for some time, and therefore that the end of free money or cheap money isn't upon them just yet, and that's perceived to be a good thing for equities. Obviously not so good for the dollar, but doesn't really help us in the long term, because of course people need to be weaned off the drug of cheap and free funding.
Or not. Right, we'll see what happens. Right, the data released over the European session.
Okay, well, a couple of points to pick out here. First of all, very first thing this morning, we heard from the governor of the Bank of Japan, Mr. Kuroda. He tried to put a positive spin on the recovery in Japan, although he's obviously looking at a completely different set of data points to me. So once again, I've got to beg to differ.
Possibly a different country, even.
Well, potentially. I mean,
after 25 years of their strategy, we'll see. It's flatlining is probably the best thing to say, isn't it?
I suppose you'd have to call him a conviction banker, wouldn't you, on that basis? So, and then coming to the European trading session proper, we had CPI. Consumer Price Index for September for the Eurozone. Look here at the year-on-year number. Very disappointingly, as far as the ECB must be concerned, that came in at minus 0.1%. That was at least in line with the forecast of minus 0.1%, and indeed the prior number of minus 0.1%. But given that their inflation target is at or near 2%, they've clearly got some way to go, which leads me to think that there'll be some action in the latter part of next week. We also saw trade balance for the Eurozone. This time the figure was for August. It came in at a positive 19.8 billion, but that was well short of the forecast of 22.8 billion, and indeed July's 22.4 billion. So another concerning number for the ECB as well. There is, the trade balance is slipping backward, it would seem. In terms of the data points for next week, we start off with a big bang on Monday morning, very early Monday morning. We have
like 3 or 4 in the morning. They're sort of
3 o'clock, I think. Yeah, London time.
I'm going to stay out for that one. I want to see what number they come up with. It's going to be fantastic.
So China Q3 GDP, as you say, read into that what you will. Take it at face value or ignore it. Alongside that, though, we've got retail sales for September. The Chinese consumer has been perhaps the one bright spot in the Chinese economy of recent times, but also industrial production for September. And it's those latter two numbers that I think I'll be paying most attention to. Though I'm not sure I'll be up at 3 to see them. And then on Tuesday, we have the producer price index for Germany for September. Thursday sees UK retail sales. On Thursday, probably the most interesting day of the week, at least for the headline, Eurozone ECB interest rate meeting, and where many of us expect to hear Mr. Draghi outline an extension or an expansion or an amendment to the existing QE plan. And then on Friday, all eyes are back to China, where we've got the Caixin PMI for October, and then back to Europe for the market PMI reads for the Eurozone, for France, Germany and Italy too. So a big day as far as PMI numbers are concerned next Friday.
Okay, so quite a decent collection of data there. Next up, the European movers.
Okay, well, we started the week with some disappointing news from a UK high-end fashion retailer, Burberry, and we're finishing it with a similar story from their German counterparts, Hugo Boss. They warned late last night, just after the close of the London session. The stock traded down today at 92 euros 20. down 9.8%. The ticker's BOSS, by the way, here. They were down 9.8% simply because they've warned on profits after falling sales, not only in China, but also perhaps surprisingly in the USA. And they've cut their revenue and gross profit forecast for the full year. And just to give viewers a flavour of where the company's heading, sales in Q3 fell by 1%, said the company, and I think the expectation was for growth, with sort of weak China being balanced out by the rest of the world, but that obviously hasn't happened.
Not exactly cheap clothing, is it?
It's not. It's not really, but to date.
They managed to ride through the storm.
Yeah, you know, the high end of the markets, you know, doesn't seem to date seem too fussed about spending, but not worried by price, and therefore had been thought to have been immune from any downturn, but that no longer seems to be a given. And then our second stock this morning that's taken our eye is back in the UK, Glencore, GLEN, is the ticker there. Before I went away, they were, you know, hovering on the brink of a disaster. Since then, they rallied sharply. They're up again today at 121.6p, up around 2.9%. And the story is that the troubled miner is planning further debt reductions to target a better credit rating, was to move away from, it's almost bordering on junk at the moment, wants to get back to investment grade credit rating. And the new plan from the company aims to get debt down to around $18 billion or less from its previously stated target of 20. Interesting to note, though, that before Glencore even announced these plans, Macquarie, the Australian merchant banking specialist in the mining area, they said they felt the appropriate debt reduction figure would be down to $16 billion. So perhaps if they'd gone to that straight away, they wouldn't have been in the mess they are now. But
yes, or they could have said we're going to target 16 and not do that much. But right, we'll see how Glencore works over the next few months, no doubt. On to the US data points. Sorry, the movers and shakers.
Yes, indeed. Well, I'm really coming back to a story that was unfolding yesterday in London. That's ARM Holdings, ticker ARM in London and ARMH in the US. Trading around 979.5 this morning. That's unchanged. But takeover rumours continue to swirl around the chip designer. Yesterday, the talk was that US semis are having a good day because of a potential bid or bids for flash memory maker SanDisk, ticker SNDK, and ARM shares rose by around 5% yesterday. Interestingly, they did that after they dipped around 1.5% on Wednesday, following a warning from the Dutch microchip group ASML. So, you know, the sector's certainly been in the news this week. For those not aware, ARM designs and licenses chipsets to the likes of Apple, Samsung, and many other equipment manufacturers. And its kit is in, it's fair to say, many, if not most, of today's popular consumer products, including your phone there, I can see. Company earns its living by charging revenues on the licenses that the chipset designs, and it also gets royalties in terms of every time the chipset design is deployed by the manufacturers. The market cap is around 13 billion, so it's not huge as far as the 13 billion pounds, not huge if one of the bigger American names were to come in for it. Just trading, as I say, around 979.5 before we come on air. The 52-week high has been £12.33, so we're some way off of that. The business has grown over the last sort of 6 or 7 years, but to be absolutely honest, it's never really scaled in the same way that US majors like Intel and Qualcomm have. So, you know, perhaps a bigger home for the business.
I think Apple should buy them, actually, but that's just my thought. But SanDisk also a great company as well. I think it's a leading product as well. So the whole area is definitely up for grabs at the moment. It is, certainly, yeah. Right, I'm trying to get to the data points before. Let's have another go at the data points.
Okay, well, we've got one key data point today, and one that I'd like to keep a close eye on, which is industrial production. This is for September. The forecast is for a further dip of minus 0.3% versus August's dip of minus 0.4%. Just to put this into context, industrial production has been declining since November 2014, as has the other interesting figure there, capacity utilisation. So watch out for that as well.
That was something that also which you're the only person I know who does this, but actually looking at the trend of the data rather than just the numbers themselves, because the trend is actually in a way more important than a one-off.
Yeah, I think
I've never seen anybody actually publish, the trends or saying, this is it's going down for this amount of time.
I think it's the only way to do it. I look at if you can view data on a chart, it's much easier to visualise what's happening than it is.
Well, that's what I do for a living. Yes.
Well, there we are, sir. And then in terms of data coming up next week, it's a bit of a thin calendar as far as the US is concerned. We've got housing starts on Tuesday, nothing at all of note on Monday. Thursday we'll see the weekly jobless claims, and Friday we have the flash manufacturing PMI for October for the US. So a few data points, but they're fairly sparsely spread out across the week.
Okay, well, let's go on to the US pre-market movers and levels.
Okay, well, we start back in the semiconductor space, because there wasn't just stories around ARM and Sandisk yesterday. After the close, we heard from Fairchild Semiconductor, or just prior to the close, I should say. FCS in the US is the ticker there. They're trading this morning around $16.86, which is unchanged, but in yesterday's session they closed up 3.12%. Why is that of interest? Well, despite a third quarter earnings miss and lower fourth quarter guidance, the shares rallied, I should say, on report of talks with either Infineon and or onsemi about a takeover deal there. So, yet another takeover story, one that wiped out a negative earnings story there. And then moving into the airline space with the company Spirit Airlines, that's ticker SAVE in the US, $48.15 they're trading, pre-market down around 3.82%, and the budget airline guided lower for Q4 on revenues and capacity. That's disappointed the market because the forecast with analysts there had been for rising capacity over the coming quarter, and so it looks like it's back to the drawing board for them. The management also said that fares were low, they're likely to stay low, and margins will remain under pressure. So plenty to think about there. And then in terms of levels to watch today in the FTSE, we go with 63.60 on the downside, plays 64.30 to the upside. For the DAX, been able to narrow the range here for a change. 10,100 is a downside level, plays 10,170 to the upside. Excuse me. And then for the S&P, 1996 on the downside, plays 2030 to the upside. Unfortunately, that's starting to widen the range there again. And it's the same story in the Dow. 17,064 on the downside, plays 17,172 to the upside. Will be interesting to see where both of those indices finish the week, of course. Currency-wise, a little bit of respite for the dollar, which had given ground against the euro for most of the week, but 113.30 now is our downside in the euro, plays 113.75 to the upside, although it wouldn't surprise me to see it back above 114 sooner rather than later. Aussie dollar, US dollar, 72.65 now on the downside, plays 73.20 to the upside. Be interesting to see how that reacts to the Chinese data on Monday. Dollar yen, probably the yen has been the biggest beneficiary of recent dollar weakness. So 118.88 is our downside level in dollar yen, plays 119.25 to the upside. And cable seems to be holding its own, 154.14 on the downside, plays 154.60 to the upside.
Right, so it's sort of a bit of a wait and see mode there for many of these markets. Okay, in focus today we have the dollar. Yeah,
well, we started the week with a look at dollar index, and I thought we'd finish it in a similar vein. So as we said on Monday, the dollar index has sold off sharply since the highs posted in March 2015. Fed caution on US interest rates may be driving this move. I know Jimmy Bullard came out last night and said he still felt that a rate rise in 2015 was possible. But if you look at the Fed fund futures on the CME, they're suggesting that there's virtually no chance in October, and and a 30% or less chance of a December rise. And remember, they don't meet in November, so there's only two opportunities left. We said on Monday that we thought dollar index would retest the 200-day EMA line at 94.46, and we did indeed do that, and we broke below that line to test at 93.80. 92.47 though, the 22nd of Jan low remains intact. Just to put the move in perspective, we've had a 16.72% retracement from peak to trough in dollar index so far this year, as of the close last night. Obviously, if we get a poor industrial production number today out of the States, you could well see it trade lower again.
Okay, well, that's sort of hanging precariously at the moment near the 200-day EMA, but we'll see how, obviously, probably the Chinese thing and that data today will resolve that one way or the other.
I'm sure it will.
Darren Sinden, market commentator, Admiral Markets, thanks for your thoughts today. Have a good weekend, and we'll be back on Monday.